Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. Do the Chinese EVs have a chance? Last year there was some fairly strong narrative about how the Chinese EVs will dominate America. They'll take over in droves. This was a strongly supported narrative from the whole community. Well, with the exception of me. I said there's no way that was the case and gave solid economic reasoning as to why, yet that was not still enough to convince many people because they had better proof. They had history. The entire rhetoric of the Chinese EVs, I think the word invading has even been used, the US, well, it was based on one thing that happened in history. When there was the oil crisis in the 70s, all American cars were built without factoring in any fuel efficiency at all. If they needed more range, they just made a bigger gas tank. And you ended up having the likes of Cadillacs with engine capacities in excess of 8 litres. However, the Japanese could make much smaller budget cars that used a lot less gas. Now, for some reason, people thought that the Chinese EVs would do exactly the same. A lot of you even told me it's going to happen. I don't know what I'm talking about. The Chinese EV industry is moving at such rapid rates. Even though I explained how those rates were all statistics and not real growth in what matters. Anyway, we're talking about something that the Japanese did, not the Chinese for a start. And at the time, it was with black swan events and unforeseen circumstances. We could just as arbitrarily look at what happened to Japan in the early 90s when the asset bubble popped, in what I believe is still the largest bubble in history. The city of Tokyo alone was more valuable than the entire United States, to give you some idea of how much it had bubbled. And we could say that China is a bubble and ready to pop too, if we wanted to just arbitrarily assign events that happened in history. But now I think it is more evident that I was right, which I never doubted for a second, by the way, and haven't changed my mind on. It was plainly obvious it wouldn't happen. I think the smoke and mirrors, aka statistics, about the Chinese EVs are starting to unravel. I had many people telling me that it's too late even. BYD will win the market with a low-cost compact EV at around $20,000. Everyone can afford that and will buy it, despite it being about the price of a brand new Nissan Leaf today in the US, with tax credits. And the BYD Dolphin hit 10,000 units a month of production in its first 5 months, except that 3 months after that, it still seems to be hitting around that 10,000 units a month mark, i.e. halfway to volume production, which seems to be where all these manufacturing lines end up. Even the basic compact BYD couldn't come close to reaching volume production. Check any Chinese EV model, make sure it's just BEV, and then look at the sales. They all seem to have a production limit of around 10,000 units a month. The same for legacy. Volkswagen is around that level too. They can't hit volume production. Just like I was saying all the way back last year, just how hard volume production was. It wasn't even my own original thought. Elon has mentioned it about half a dozen times on Twitter alone. I figured he probably meant it, if he said it that many times. No one else is tough enough to go through production hell. Without volume production, an EV company can't hit profitability. Without profitability, they can't hit sustainability, and they certainly can't afford to try and compete with Tesla on their home turf, at what Tesla specializes in. Oh, also, have you seen the size of Tesla's new factory in the US? The Chinese EVs simply can't make them fast enough. But even if they could, even if they hit volume production and profitability, could they take on Tesla? Well, no, because remember, there's a massive battery shortage in the entire EV industry. Not only that, it's really difficult and incredibly expensive to rectify. You need to spend about $10 billion just on a battery factory, and then you're still at the mercy of finding the elements to make the batteries. It has all gotten even harder than it was previously. And Tesla had first mover advantage by a long way, and could see all this coming a mile away, and likely prepared for it. I really don't know what the Chinese EVs can do to secure their own batteries if they want to ramp up. It's just such a barrier to entry. Of course, none of them sell any decent level of EVs. Even NIO only delivered 25,000 EVs last quarter. Right, BYD, they have their own in-house sales. Well, yeah, but they're not really that revolutionary. They're just a different prismatic form factor. They even appear to be less energy dense than BYDs, but possibly lower cost BYD. And the Blade battery does appear to be very safe. I think BYD are also using their battery pack structurally, but I don't think that is quite the same as Tesla's cell-to-vehicle integration. Either way, despite BYD having their own in-house LFP battery, they still appear to be losing money on their BEVs, and still aren't close to volume production. But even if they could, it will require tremendous effort in building battery factories and sourcing minerals to expand any further. Of course, that is tough to double down on something that loses you so much money. One problem being a Chinese EV is you have little brand value. There's no history, prestige, class to the brand, thus no reason for customers to pay extra for one over, say, a Tesla. The Chinese EV always has to be a cheaper competitor to Tesla, which makes it tough, as it means they will need a lot of cost savings. And sure, over legacy autos, I'm sure a Chinese EV startup is run a lot more efficiently, and producing in China saves money too, not to mention the costs of dealers and unions that they save on. Of course, instead they do have tariffs to pay for importing, but there is no brand value, and when Tesla are able to already produce vehicles for less than the Chinese can, then it leaves very little margin when you try and undercut Tesla. Well, that's not true. It leaves negative margin. Sure, hopefully for the Chinese, Tesla will keep raising their prices so they can a little too, and maybe scrape a profit somewhere if the cost of batteries ever comes down, which it appears to be doing the opposite. Whereas a legacy brand like Porsche can get away with charging exorbitant prices, high enough to actually leave a margin. And we're talking about China in their home market, already struggling to this length. Can you begin to imagine if they tried to sell in the US? The service centers, charging network, tariffs, and the big competitor called Tesla. Even if the Chinese actually could hit volume production and profitability and have enough batteries, then they are still also missing the other element of a successful EV business. Customers. You need to have the demand. Why would a US car buyer want to buy some Chinese EV they know nothing about when they can spend a fraction more and buy a Tesla? Well, possibly because the Tesla may have a 2-year waiting list. In fact, I'm not sure many of these Chinese EVs have even much of a waiting list now, perhaps a month or two, implying they probably can't get away with raising their prices any further. Oh, and also, if they do increase their supply, then it would mean they're making more than the market actually wants, and will have to reduce their prices. The Chinese EVs are not coveted the same way as a Tesla. A lot of people just want Teslas because they're Teslas, not because they're just an EV. And for those of you who own a Tesla, you know exactly what I mean. Legacy can generate demand with advertising, and they can afford to advertise because Legacy can actually get away with higher price tags than Tesla. I mean, over $100,000 for an electric Hummer. The Hummer brand meant Legacy could justify that. The Chinese have to offer actual value, but whilst also likely cutting costs in other places. It's going to be tough. I don't think it's the same situation as the Japanese in the 70s. The Japanese only had to compete against GM, Ford, and Chrysler. It wasn't a big challenge. The Chinese have to compete against Tesla. Alright, so I hope this time you all agree with me in that China has absolutely no chance of dominating EVs in the US. In previous videos, I went through all the economics of why it wasn't possible, but now it's even simpler. We can just look at some basic math. It will come down to batteries. And although the Chinese can make 10 cars out of the same amount of cells than Tesla can make just one vehicle, well, those 10 Chinese vehicles can't even legally be sold in the US anyway. And no one would even want to buy them, with ranges of around 50 miles. The actual Chinese EVs that are decent enough for the US market would end up costing more than Tesla to be sold in the US, or else they'll lose that much more money. But a rational American won't want to spend more on a Chinese EV than a Tesla. Anyway, I hope your sentiment has changed now since I last researched the Chinese EVs, and you realise that they're clearly not competition for Tesla. It feels like Tesla has jumped levels again, whilst the Chinese are standing still. But perhaps that's just the pace Tesla move. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.